back, guys, to our channel, Move Up with Mike, MichaelGlass.com. As always, we like to start off our disclaimer, and this simply says no matter what we show here today, that is for educational informational purposes, any actions you make are solely your own responsibility, trade at your own risk. So, this is our weekend technical analysis plan. We look at the economic calendar, we look at charts of some of our FANG market leader stocks, we also look at gold and crude, and then we always end with the education spotlight. We always like to start off with a little inspiration. So we got good old Dolly Parton here, and she says, "The way I see it, if you want to see the rainbow, you have to put up with the rain." And I think, given what's going on with the country right now, I think we have to see the rainbow at the end, but also in your trading. I think what's more applicable is that, and this is something that I struggle with. If you want to make profit, you have to deal with the heat. So if you want to see the rainbow profit, you have to deal with the rain heat. You have to be comfortable with not only taking heat but taking a loss. I had someone over yesterday doing a little bit of training, and I said to her what I say to everybody that I kind of interact with when they talk about trading. Trading's not hard. Discipline's hard. Emotions is hard. And so, yes, you want to make profit. You want to get to the rainbow. You have to deal with the rain. You have to be comfortable with taking heat. That doesn't mean you need to just blow out your account and take loss after loss after loss. But when you define your plan and you trade your plan, it's not always going to go straight from entry to profit. You're going to have to deal with the ebb and flows of the market, the rain. So, guys, as we get ready to begin, if you like what you see, please make sure that you like or subscribe. So we can see that all of the major indices ended up for the week. S&P Dow Jones up 3%, Nasdaq up 1%. The S&P Dow Jones are still down for the year. Dow is down the most. But again, as we've been talking about for pretty much the month of May, the Nasdaq is up for the year. Gold also was up fractionally for the week, and it's up 14% for the year. And crude was up 5%, down 46% for the year. And that's one of the things I was talking with that person yesterday also today. Crude's going up. It's just, how much and when. But what's also interesting, and it's just on a complete side note, is that all of these metrics that we're looking at here all were positive for the week. That's very rare when they're all positive. Gold is typically inverse to what the indices are doing. But all of them were positive for the week. So when we think about what was key for the market this week, I think we're seeing the markets continue to rally, to continue to stay positive as the national lockdowns are ending. Um, sure, there are some areas that are showing some spikes. Here in North Carolina, they're showing spikes now that we're loosening. Other states, you're not sure if they're really telling you the truth about the data. But regardless, there's not the wave that caused the shutdown. We haven't seen that type of wave. So as businesses open up, um, just sitting here looking at restaurants now, and just seeing the difference between which ones are actually allowing dine in and which ones are not is interesting. So until all the economies open it up 100%, that's well, in my opinion, will be the catalyst to see if the market can continue to move higher. We basically have retraced the March move down, but what's going to get us back to the ultimate highs? And it's got to be a catalyst, and the economy, and those we know that the market likes certainty, and right now there's not certainty because we don't know what the effects of the lockdown is going to be, and more importantly, we don't know what the effects of the businesses opening is going to be. All of the markets ended positive for the month of May. Again, we basically have retraced the COVID 19 drop in March. Overseas news on Friday, Trump announced that he's cutting all ties with the World Health Order, and also, had some commentary about China, but it wasn't as bad as some people thought in terms of the trade deal, and he didn't mention the trade deal at all, so that's why the market really didn't react negatively to that. He also signed an executive order that could impact social media companies, but it's one of those. Is there any teeth behind what he signed? Who knows? But for those of you who are in Facebook, Twitter, Facebook owns Instagram. You know, those of you who own those companies, it's something for you to pay attention to because it could, in the end, potentially affect them, especially if the way Congress decides to actually do something about it. Maybe not what he signed, but if Congress starts talking about how these companies make Facebook, Twitter, specifically Facebook, makes money on these advertising ads. So yeah, Facebook wants nothing to do with truth or nothing to do with fact checking because a big part of their revenue stream, especially right now as we're in the 2020 election stream, is ad spending, political campaign spending, and they don't want to do anything about that. In terms of economic news, Fed Powell talked about that there is more room on the balance sheet for to buy more, but he's totally against negative interest rates. There was some preliminary GDP numbers, but again, the market rallied. So even though some of these numbers are negative, we had another 2 million filed for unemployment this week. So that means since COVID-19, that's over 40 million people have filed for unemployment. But the market is rallying, so they're the market has rallied, and you could say it's due to some of the stimulus that Congress and the Fed and the president has put into the economy. They're definitely trying to put it on steroids, but can it sustain us? And what's the other thing? We're going into the summer, and summer is typically a low volatile, boredom time, but I think we may see a little bit more action as we continue to react to COVID-19. So going into next week, what's going to be our key market? No real big earnings, but I do think it's important to see that there were some retail companies. Again, they can speak to the consumer. Speaking negatively about the consumer can impact the market. J.C. Penney's is speaking this week. We know that J.C. Penney recently said they're going to file bankruptcy. There's a couple other retail companies speaking this week, but I don't think they're going to move the market, but it's important to know. As far as the economic indicators, the big thing is on Friday, we've got the jobs report. All right, guys, let's flip the charts and take a look. Okay, so as we begin to look at our charts, we're going to start off with the S&P 500. And we can see we've been talking about this 3,000, just below 3,000 resistance level. It kind of goes with this gap that happened back here at March. And we have finally, I would say, accepted above that level. We've been here for 3 days, and we have pushed down, but the buyers, that's why you have these wicks, so the buyers have come in to buy it. So I think that this is definitely now going to be support for now. So where can we go from here? I think you can look at this swing high over here. So we got 31.17 as a potential level, and of course you can go all the way up here. But I'm going to go ahead and draw this in now. So we're going to look at this swing high. So this is where we are. Of course, we're right in the middle, so we don't really want to get involved. We don't want to buy in the middle of nowhere. So if it comes back, certainly be interested in buying and testing the highs. But again, what's going to be our catalyst to keep the market moving higher? Let's go to gold. Gold has been in a nice little range here. You certainly want to look at this bottom of this range here, which is about 1700, just below 1700. But for the past month and a half, the buyers have said, you shall not pass, and they bought this. So, of course, at this time, you could say it keeps testing, it could finally go down through. But as long as this is down here, you definitely want to go ahead and keep buying. And you can see this is resistance. 1775 is resistance. Where's it at right now? In the middle of the range, stay away. Crude. Crude is also at a key resistance level that we've been talking about since we've come back doing our videos. $35. We're sitting right there. If we can finally accept and close above this level, $36, $35, we can certainly look to go fill the gap up to $41. So we're right here. We're on the cusp. And again, if we can close above that $36, look for us to run up here to $40 to fill the gap. All right, what about our FANG, our market leader stocks? We got Facebook. Facebook exceeded where we were back before COVID-19. Has pulled back to this gap up level, and the buyers are holding it. So 223, the buyers are holding it. Also matches up with this swing high over here. So we are at a potential. You might want to consider buying Facebook, but of course you want to make sure that we are moving back up and not going to break down through it. Apple. Apple has come back to again the beginning of the COVID-19, and we're basically testing that level right there. Um, I've got this level in here right here. Working with someone, really. Let's take that off. Showing them how to draw their levels, and really can take this one off here. Let's double click on it too. That's trying to draw in the. I'm sorry. That's drawing in the volume profile levels. My bad. Um, so Apple's at the top here. What I would be concerned about is let's bring it down a little bit, and you can see the swing high over here that we have to watch, which is 327, 328. Um, we are at the bottom. I would like to really see it come back down here, or more importantly, come down here to about 312 to where this little gap up is here. I would feel better about that before I start buying. Yeah, definitely this 312 is a little bit better. Okay. Amazon, blazing a trail, blazing a trail. It was one of the leaders up. Now it's going sideways. We got the top here around 2,500, and you can see buyers coming in around 2,300. So you got a big range there, a couple $100. Um, but we are just kind of going sideways. So um, really need to see it start doing something. But as it comes down into this 2,300, below 2,300, it is something for you to consider for the buyers. Um, really see buyers coming in around 2,330. But what's going to be the catalyst to get us above 2,500? Netflix, also one of our leaders, that is now going sideways though. Netflix was one of the first to come back and blow out the COVID-19 levels. Um, and it actually made a new high. But now it's pulling back. We did get all the way down here to our identified level. Look at the wick right here as it came down to 400, and now they bought it. So now, if we get above 422, we might see us start to retest the 450 level. But the opportunity to buy was earlier this week. Let's finish off with Google. Oh, let me show you one other thing real quick on Netflix that I forgot to say. Notice that when it came down into the 400, what did it come down into? It came down into a low volume node, and that low volume node acted as support. Got to pay attention to our high volume, low volume nodes. Back to Google. Google hasn't gotten all the way back up here to the highs, but it has certainly done really nicely. Again, you can see this gap right here. If we can close above 1440, then we can make a move up into that. But for right now, this is now going to be resistance, and I will wait for it to come back down here to 1350. So our focus for our education spotlight for the month of May has been order flow and understanding that candlesticks are great. I start off with candlesticks. Many people start off with candlesticks, but being able to look inside the numbers and seeing what buyers and sellers are doing at the tops, at the bottoms, depending on what candlestick patterns. So you like swing highs, swing lows, you like double tops, double bottoms, you like head and shoulder patterns. One way you can confirm those types of chart patterns is actually looking inside. So as we get to the neck of a head and shoulder patterns, are you seeing the sellers coming in and hitting it? So being able to have a platform that allows you to see the order flow, that allows you to see the footprint, numbers bars, whatever your platform calls it, can certainly take your trading to the next level. And so if you wanted to learn order flow, we have been recommending Trading Research Group. Little thing's going to pop out here now. Some of the link before it was broken for some unknown reason, so I've updated that. So if you clicked it before and it didn't work, it's working now. So check it out. So, as you guys knows, we're trying to help people pass their combines, and this is a great way to take part of their idle time that you have. So, we put out a video talking about other people's money, talked up Trader, earned a trade, talked about one up. We're going to put up part two of that video out tomorrow. We gave you a great overview. Toss Up Trader has come out with some information that does affect whether or not it's as good as Earn to Trade now. They're going to allow you to trade crude again. So we're going to put up part two of that video out probably tomorrow. And then we also going to start our You Make the Call. You guys come down, put suggestions in the comments, and then we will do a full technical analysis, fundamental analysis of the company, but you make the call. So again, if we're looking to help people pass their combines and their gauntlets, michaelglass.com /go/room, that will get you on the list. We are going to be starting shortly, just working out some final part of the back end side. Again, if you're looking to start one of those, we are right now recommending the gauntlet over Top Step, but again, watch the video and we'll explain why. There you go, michaelglass.com /go earn will get you to the gauntlet. And again, if you're looking to learn order flow, michaelglass.com /go /education will get you to Trading Research Group. We are Move Up with Mike on most trading platforms. Learn the truth about money on Facebook. Thanks, guys, and I'll see you next time.